Hello everyone and welcome to our lecture 5 in which we're going to discuss the differences and similarities between conventional insurance and Islamic insurance, or what we call Takaful. So at the beginning we're going to focus on the definitions of the two. So first we're going to try to define both and see the differences. We're going to focus on many aspects here. Then we're going to go to the law and regulatory framework, moral guidelines governing each of these insurance types, let's say. Then we're going to discuss the contract. So we will shed the light on the contract of each insurance, Islamic and conventional. Then we will go to the aim and concerns of the company. So as a company, as an institution, what's the aim of this? Why did it start in the first place? Then we're gonna go to the nature of premium. So the premium, which is an essential aspect of the insurance business in general, is basically starts with the premium, right? So the revenue of the company, the major part of this revenue is coming from premiums. So these premiums we collect, what is the nature of it? How do we treat it in each of these two insurance businesses? Then we will discuss the ownership of this premium. So who owns it? And how do we grow it? How do we invest it? Is there a specific way to invest it in each of these insurance types? Finally, we're gonna shed some light on the claims. How do we pay claims? How is it treated in each business? Profits and surplus and losses as well. Who owns the profit? To whom does the profit go? If the company is dissolved, who owns what's left of the company? Okay, so let's begin the class with the definition of each insurance business. First, we will focus on Takaful. So, in simple terms, Takaful is a contract between a group of persons and the manager of the risk fund. So we have two main parties, which is very apparent actually. So we have the participants and then we have the TO, wherein they pay a certain amount of money. So participants pay a certain amount of money as a contribution. Now let's focus on this, or donation. So you can even call it a donation, the contribution. That's how important donation is in Takaful business, for the purpose of assisting. So we can even now start to see the aim of the Takaful company, for the purpose of assisting each other in times of adversity when you face the risk. Now let's go to the conventional insurance, which is a contract between, again, the company and the insured. So the insurer, the company, the insurance company, and the insured, whereby the insurance company is obliged. So what's the focus here? Now we get into the technicalities of the contract. Now the insurer is obliged to pay monetary compensation to the insured, so the participant in Takaful, here it's called the insured, to the insured member or beneficiary in. So why did we say insured and beneficiary? Because the beneficiary could be someone else, not the insured himself, the family, the guardian of his kids, etc., in the event of misfortune. So there is no mentioning of anything related to donation here. It's somehow a business between two parties. One party needs a service, which is protection. The other party is providing this service, and they get paid some money in exchange for this. This is what we can see now. Now let's continue with the next slide and try to focus on each aspect separately. So we begin with the law and regulatory framework. So where does Takaful get rules from. So the sources of law are, of course, based on Quran and Sunnah primary sources. Sharia justified statutory provisions, so other provisions as well, fatwa and local laws. Could be also a fatwa, an issued fatwa regarding some specific scenario. Now let's go to the conventional insurance sources of law and regulation. So where do we derive rules from? Is there some source, a specific source, Quran, Sunnah, any book, anything? It's set by state. Usually it's set by a state or man-made statute. So it's man-made. So I will come up with an idea and then you follow or derive rules from my idea. That's why we said man-made. Legal, literature, or we can be following some law, whether it's civil law or others, and customs as well. It can be also based on the customs of the people in a specified area. So they have a risk because in that specific area, they, let's say, have some costume in which they need to protect each other against something. So the law can be derived from basically anything, you can say, based on what we need. So you can say here it's more flexible for you. So in terms of profiting, etc., you don't have many guidelines, you don't have many barriers. You just find, some law in which you can follow, and if it's suitable for you, profitable for you, you can simply adopt it. Now let's go to the moral guidelines, which is also an important aspect of Takaful, since the whole business of insurance is basically to protect people, to help people do better in life. So Takaful invests premium in accordance with Islamic values and Sharia guidelines. So we didn't only say Sharia guidelines, we also said values of Islam. So it must be for a good cause. It must be related to some real economic activity. Okay? Now, what about conventional insurance? Insurer invests premium consistent with one motive, profit motive. So I need to make more profits. How can I do that? I will find the best way to do it. So as a manager of the company, I work for the shareholders of the company in insurance, and to satisfy them, I should get them the highest profit I can get. So it simply follows one rule, which is profit maximization. However, of course, they have some moral guidelines. Now let's go to the aim of each company in the Takaful business. The aim, as we said in previous classes, it started with an idea that we as a group of people in this class or in this university or in this city realized the need to protect each other against something. So we all are suffering from corona. We need to protect one another. Together we are stronger. So it starts with the concept of brotherhood. That's why we started this whole thing. Solidarity and protection and mutual cooperation. So we just want to be fine during the corona. So to do that, the law of probability distribution says if we all contribute together, we can share the risk. Those who get negative impact, we can compensate them to bring them back to their normal state before, let's say, getting the corona. Okay. Now what about the conventional insurance aiming at commercial gain? So how does the whole company started? The company started by shareholders. So shareholders started this whole business. Why? To make profits. They found that to invest their money in an insurance company is very profitable. The contract ties between many interests which are of different nature, hence there is a conflict of interest. It may occur basically. So now again, let's go back to some details. We have the manager, we have the shareholders. Shareholders own the business. Manager works for the shareholder. We discussed in the previous slide that this manager's task is to make more profits for the shareholders. So why does this whole thing started? Because shareholders started the company, they invested capital to profit. Okay, so that is basically the aim of the company. Now let's go to the contracting parties. So we discussed that in Takaful. We have insurers, which are basically the TO, and we have the insured, who are the participants. Whereby in the conventional insurance, of course, very similar. So there are many similarities between the two. We're not just focusing on the differences. Through this class, you will notice that, of course, there are many similarities between the two. So we have the company and the insured members. However, looking at it this way, it might seem very similar, but after we realize what's the nature of this contract between these two, we might start to understand differences. However, considering parties, we have two parties in both businesses, insurer and insured. Okay, let's continue with the aim of the company. So in Takaful, as we said, it's based on the concept of brotherhood. So the aim of this company is simply to achieve the well-being of this community, optimizing operations for affordable risk protection. So we need to try to make risk protection affordable. What do you mean by this? By lowering the price so everyone in the economy or the community can have the option to purchase or participate in this pool. Okay, so the price must be affordable for our people. What's affordable in Malaysia may not be affordable in some other countries, and vice versa. What's affordable in Canada may not be affordable in Malaysia. Now let's move to the conventional insurance. Again, profit making, maximizing returns to shareholders. As we said, shareholders started this whole business, which is a commercial business, to profit from. Now, what's the concern of the company? In Takaful, the participants gain more affordable benefits and stability because basically they own the pool through large memberships. So when we have, as we discussed in almost all lectures, in probability, if you want probability to work properly, you need higher amount of people in the pool or participants, whatever you want to call it. Why? Because let's say we have two people in the pool. If one got ill, we have 50% illness. However, if we have 100, maybe 30 would get ill. So it's 30%. When it's 1,000, you realize the number might be different. The larger the sample is, the more accurate. Because, you know, the bias, when you have one person, like let's say you were very unlucky, you had only two people in the pool, two got ill. What's the percentage of people who got ill in this pool? It's 100%, which is unacceptable. You will never have enough money to pay claims for 100% of people getting ill. Why? We try to go back and discuss why did that happen, because we were so unfortunate, so unlucky that both of our participants out of two got ill. So our percentage of people who got ill is 100%. However, in, let's say, 100 participants pool, maybe only 5, so it's 5%. 1,000, maybe 45, so it's 4.5%, and so on and so forth. Now let's discuss the premium. So what's the premium? In insurance, we say premium. We are indicating the amount of money here that participants or insured pay to the insurer or Takaful company. So in Takaful, we discussed in the previous class, it's considered as donation. Why did we do that? Let's try to remember quickly. So we said that there is a gharar. We discussed the element of gharar. It exists in such contracts. Why? Because we never know how much contribution we get in back. So I pay you 100 ringgit and then I may get 1,000, 2,000, 10,000 or zero. So it's like a gambling game. However, we said that the beauty of the contract of donation is that when I wanna give you a gift, donate something to you, you either say yes or no. Okay? You don't have the option to say, well, I don't like the color, so you don't have room for gharar basically. It's a gift. You either accept it or don't. So here we will donate our money. However, the purpose of this donation is if anyone in this pool, including myself, got sick or faced a specified risk specified in the contract, you may pay them compensation up to a certain amount of money. So they shall not become better off what they were before the incident happened. We must just bring them back to where they were, not a better state. So there is no gambling here. And regarding the gharar, you paid me 100, you never know how much you're getting. Since I'm paying you the 100 based on donation, this gharar is all gone. And who owns the money at the end of the day? It's us, we in the pool. It's not you. You're simply a manager. The TO is simply a manager. Now let's go to the conventional insurance, a consideration for the payment of claims as a means of protection given to the insured members. So premiums paid by policyholders are various and depend on the age of the policyholder. This will be very clear when we discuss the nature of the contract. So now let's go conventional insurance. Again, we have two parties. We have insurer, we have insured. So these people need to protect themselves. To do that, they contribute some amount of money. We called it premium. So this premium goes to the insurer. Why? In case I faced a specified risk discussed in the contract, you will pay me a certain amount of compensation. So we're still not very clear about the contract, but you can somehow start to realize that it's a contract of exchange, right? I need a service from you, so I'm paying you some amount of money. However, we will get into the details later. Now, this service is not very clear in terms of when you're gonna pay me, how much you're gonna pay me, etc. So we will discuss that in more details in the following slides. Now let's go to the ownership of premium. Who owns the premium? So me and you, 1,000 people contributed 100 ringgit each. So now we have 100,000 ringgits. We call this premium, total premium. Who owns it? We just said in the Takaful business, it's provided based on the tabarru concept. So it's donation to whom? To all in the pool, 1,000 people, including myself. Okay? So we, 1,000 people, are partners, shuraka, in this pool. We own it. Okay? We hired someone to help us provide some services. Now, conventional insurance, who owns the premium? 100% Takaful company. Once you pay the premium of 100 ringgit, let's say again we have 1,000 people, we decided to go into and start and participate in some insurance, conventional insurance policy. 1,000 people, 100 each, 100,000 as premium is paid to the insurer which is the insurance company. Who owns it now? After this moment, it's owned by the company. So it's an amount of money channeled to the company. So we sacrificed this 100K. Why? To protect ourselves against, again, some risk. Corona, accident, can be anything. Okay. So now we're getting into deeper information. Next, let's go to the investment. We discussed how investment is a very important aspect of Takaful and insurance. So again, these guys are having high amount of cash. So I collected just now 100,000K. What shall I do with this money? I should pay claims. However, if I put it on the side, it will depreciate. The value would depreciate. Why? Due to inflation. We discussed that. Many aspects, many factors will play a role in making my money less. So since I have this money and I don't need all of it, maybe it's a good idea to invest it and grow my fund, make it stronger. However, again, remember what we discussed at the beginning of the class. We must follow Sharia principles. There are specific Islamic laws that we must adhere to. Okay? Now, what about conventional insurance? Usually, they deposit these amounts of money in different institutions. Banks, conventional banks is one of them. So what do conventional banks do? They basically use your money, pay you some interest. So we deposit our money with a conventional bank. We earn a fixed interest or floating interest, which can be 5%, 6%, different countries, different interest rate for the insurance company, plus other securities prohibited by the Sharia law. So usually they also invest in bonds and other securities. They don't have the limitations we have in Takaful. So you can invest in interest-bearing instruments, anything, can buy securities, government, from bonds, from companies. You can invest in stocks, you can do whatever you want with this money, and you don't really care about any Sharia principles at all. Now, what about the doubtful element in Takaful? Do we have any doubts here? Well, the contract is very clear. It says donation. The reason for starting the whole business, again, very clear. Brotherhood, owned by us. We became partners in owning the fund. We are 1,000 people. Very simple and clear, actually, and well defined. How much money you get based on your loss. It must not be higher than your loss. Why would I pay you? Why there is no gharar? Because it's a donation. We started the whole thing based on this. So you notice it's all following. The parts are, very connected, very clear. Now we go to the conventional insurance. Since it's a contract of exchange, we have an issue here. First part from the insured to the insurer is clear. So I paid you 100, it's a premium. Very clear, no problem. Now, in exchange for what? Why did I pay you 100? I paid you 100, so you provide me with protection. How do you protect me? By providing me with some some money. So this money will be used to get back to where I was before the accident. However, until now, you are describing what you're gonna do. You haven't discussed how much you're gonna pay. So how much exactly you're gonna pay me, I don't know. However, you said it's a contract of exchange. We must know exactly what you're getting in exchange for the payment, the 100 ringgit. And when? One more issue. When would you pay me? Is there a specified day in the future, or it's ambiguous? So we start to realize, up to this moment, let's keep the discussion here. In the following slides, we will get into deeper stuff. So certain unspecified elements exist in the contract. We can see clearly now that many aspects here are not very clear. We're not very certain about the payment, how much, when, etc. Okay, let's continue with the claims. So, how about claims? So, if someone got in an accident, how do we bring them back to where they were? By paying them what we call payment of claims. Okay, so these people are entitled to receive a certain amount of money to try to go back to normal. Okay, so where is it paid from? In Takaful? Very simple. It's paid from the fund, the participants fund. Who own this fund? We own this fund. Conventional insurance, who pays the claims? Of course, the company. Why? Because it's a contract of exchange. Remember, I pay you 100, you pay me claim if there is an if something happens to me. Let's go to the responsibility for claims. So who's responsible to pay claims? Now it's very clear and that it is different between the two. In Takaful, participants will pay claims to participants. So they are basically paying themselves. However, if we get into the details, we know that maybe they paid themselves, but they usually pay others because we are 1,000 people, only 40 people got sick, so we basically compensated them to take care of their medical treatment. So who paid who? Who's responsible to pay who? We partners responsible to pay other partners in the pool. How about conventional insurance? Now, the insurance company should be responsible for any claim. Based on this contract, again, who's responsible? Participants don't own nothing. They don't know anything here. They paid you 100. They don't even know how many participants there are over there, how many insured people. So, company takes care of responsibility. So, company will be responsible to pay you claims. Now, how about surplus or profit? So, what is profit? Again, when we collect money from participants, say 100,000, let's assume we paid 90,000 claims. So the remaining part, the 10,000 left, is basically ours, participants. So participants own the fund, so they should basically own the residual of this fund. However, if surplus is made, as we discussed in the previous lecture, when we discussed different takaful business models, wakala, mudaraba, hybrid, waqf, we noticed that surplus distribution was an important aspect and it differed a little bit between each of these. However, based on the contract, surplus may be shared with the TO, shared with them. So it's owned by us, but we will share it with them basically because they performed well. How about conventional insurance? Profit is attributable to the insurance company alone. Of course, again, the company owns this business. This whole business is a commercial business. So any residual in the fund, that's the goal, right? Profit maximization. So we try to pay less claims, so we make more profits, so our shareholders are happier. How about losses? The opposite scenario. When Takaful fund is in deficit, TO needs to provide Qard Hasan loan, Qard Hasan, zero interest, to raise the risk fund. So during a specified year, unluckily, we had so many claims, so much accidents due to bad weather, let's say, and the 100K was not sufficient to pay all the people. The claims amount was 150K this year. Again, due to many reasons, this could happen in some years, such as, the risk of corona and many diseases nowadays. So, what can we do? We are short of 50K. TO will help us through providing Qard Hasan. So they will give us Qard Hasan loan to use to pay claims. However, next year, or based on the contract of Qard Hasan, we will pay back the money. Conventional insurance losses are charged to the insurance company. As participants, we don't care. We do not really care if claims exceed our fund amount, which we don't even know how much we have. So if there is profits and losses in a conventional company, you don't really know, basically. You don't really care. Okay. Let's go to the benefits now. In Takaful, benefits are paid from defined funds under joint indemnity by participants. In conventional insurance, they are paid from all the funds legally owned by the company. So we discussed, and we will see in future classes, how the contribution we provide will be going or might go into different pools. These pools have different nature. One would be for investment, one would be to pay claims, etc. So when you usually pay benefits, profits, investments, or claims, all of these things will be coming to you from a specified fund. It's very clear. Again, transparency is very high. You can know every detail upfront before you get into the pool. However, in conventional insurance, we do not know, because again, the different funds owned by the company are owned by the company. So we have no right to ask any question. We don't have any right to know more details about it and how do you utilize these funds to pay a claim or a benefit, etc. So again, the ownership changes everything. It changes the rule of the game. When you own the business, it's different from when we own the business. It's very different. Now, how about dissolution? So for some reason, the company will be dissolved, okay, and the business will be cancelled. What happens? Now we have assets, we have money, we, let's say, managed to have reserves, we have some money we put on the side, we invested some money with banks, we invested some money with in buying skook, etc. So who owns this money after the company is gone? Of course, reserves, excess, surplus could be returned to participants. Who owns the fund? Participants. So if anything left, it may be returned to participants. However, consensus opinion, majority of Muslim scholars, they argued that, since we discussed that in previous lecture, since this is based on donation, I donated something to you, it's very unsatisfying to take back your donation in Islam. It's not very recommended, right? It's actually the opposite of recommended. So we should try to find other ways to basically benefit from the money. Since we started this whole thing based on brotherhood, maybe the best we can do is help the whole community. That's the majority opinion of scholars, majority of scholars' opinion. So they prefer that you donate it to charity. Not a specified type of charity, any charity as you see fit, of course. However, again, minority of scholars, some scholars said, no, it's fine to get it back because this is something, let's say, it's a very special case because there is a dissolution, and here you didn't donate the money to, let's say, poor people and got the money back. You donated the money to everyone in the pool, including yourself. So they said that this is different from when you donate money 100% to someone. Here you're donating the money, in our case, to 1,000 people instead of 1 or 2 people. So this 1,000 people agreed that it's fair if we share the money. So again, fatwas might differ. However, practices must basically adopt some fatwa and proceed based on that. So it's very clear now that conventional insurance is a contract of exchange. We basically have two parties, buyer and seller, buying a service. We called it a service to protect me if something bad happened to me. to buy this service, I paid you premium, which is price in normal language, and the service you provide me is unclear, as we said, in terms of when and how much, and many questions we raised just now. So it agrees to provide protection by paying compensation, and the agreement is stated in the policy. Okay, so we will end this part here, and in part 2 we will shed the light on the contracts. We will get into deeper information about the contract of Takaful and conventional insurance. Thank you very much. Wassalam.